So I was having a conversation the other day with someone who was waiting for the bottom of the market before they dive in to start searching for their home. And in today's video, we're going to talk about just that, how to time the market. My name is Alice Prince. I am a broker with Royal LePage Signature. I run a team called Prince & Co. and we help buyers and sellers with the real estate journey in York Region, Durham Region, and Toronto. Now, there's a lot of misleading information out there surrounding the real estate market and a lot of contradicting and scary headlines swirling around, but what else is new? I mean, scary clickbait headlines is obviously what sells, right? My problem with it all is that it paints the housing market with this one brush and it doesn't really dive into the nuances of the different areas and housing types, and it leaves people thinking that they can try and time the market. So a lot of wannabe buyers think that the bottom of the market is here or it's coming and they want to buy, but they're trying to time the market for the right, most optimal time. So you want to know how to try and time the market? Well, the short answer is you don't, and I'm going to explain why. There's more to consider than just the purchase price when dealing with real estate. Unless you're obsessed with the data, the numbers, the stats, and have your boots to the ground daily, maybe you have a slight, and I mean the slightest advantage. Realtors, economists, banks, Aunt Becky, and Uncle Bob can't predict when the bottom of the market actually is, because the truth is anything at any moment can come around the corner and really smack us in the face and derail any sort of prediction. So it's next to impossible to pinpoint the exact day that prices were going to be the lowest and have bottomed out until we start seeing it to turn around and the market to start to go back up. Now, keep in mind, 1 month of positive data isn't enough to signal that we're out of the woods, and we need a couple of months of data to see any sustainable upward swing, and by then the bottom of the market's going to be long behind us. So let's look at some real-time numbers to see if the price declines have made an impact. And right now, the market is going down because interest rates are rising compared to what they were at the beginning. Okay, guys, so let's look at some real-time numbers to see if the price declines have made an impact thus far. So right now, we obviously know that the market is going down because interest rates are rising compared to what they were at the beginning of the year. And here on my screen, you can see here that the purchase price, the average purchase price, and this is just measuring Toronto detached homes, in February was sitting over $2 million. The purchase price is sitting at $1,648,000. Now, interest rates in February were in and around 2.5%. And this is measuring fixed rates, so a 5-year fixed rate term based on a 25-year amortization. With 20% down, which your down payment was obviously way more significant, we're measuring February to now. And your land transfer tax was also much bigger because it's based on a sliding scale, which was obviously much bigger than it is now. And in Toronto, Torontonians are actually responsible to paying municipal and provincial land transfer tax. If you're buying outside of Toronto, you are only responsible to be paying provincial. So your monthly payment was $7,429 versus now at $7,297, which isn't a substantial difference yet in the Toronto detached housing market. It's like $130 something. That's not really going to make a difference on a monthly schedule. If we look at York Region, you see here that the average price of a home in York Region was $1.992 million. And now they're averaging at $1.579 million. And this, again, is only for detached homes in all of York Region, so taking into consideration all the cities there. With your down payment still being significant at just under $400,000 to now $315,000 with a 20% down payment. Your land transfer tax, again, you're not paying that double land transfer tax, you're only paying one of them, but it's still a significant amount of savings, and your monthly payment is still not substantially much different than it was in February. But what's interesting is when we move to York Region, or Durham Region, again, measuring detached homes, the average price there was $1.379 in February for a detached home, and now it's sitting at just over $1 million. With the down payment of 20%, you would be paying $275,000 versus now with just over $200,000. So that's a $75,000 difference in savings, and you'd be able to save some money on your land transfer tax as well. And now your monthly payment has gone from $4,942 to just under $4,500. Being a difference of about $461 per month. So that can be a significant difference on a monthly basis, right? Who doesn't want to save almost $500 a month? It's going to be interesting to see, what keeps happening with rates here. And as interest rates keep rising, I think that we are well enough into this sort of thing to kind of fit that into our pricing. And I think that the rate at which prices keep declining is going to start to slow down a little bit. That being said, Don't mix that up with me saying that prices are going to stop declining. I think that they will continue to trend downwards, but a lot of this big price drops, it's starting to slow down a little bit. And this is only my opinion based on what's happening right now in this market, in this moment. Things could always change, tomorrow, next week, or next month, but we will eventually get to a place in the market where we will stop seeing from it going like up and down, or I should say actually down, and we're going to start to see it sort of trade sideways and level off into this new pricing area that we're kind of in. So Durham Region has seen the biggest change when it comes to the monthly mortgage expense, but they also seen the biggest run up in prices during the pandemic. And so it's important to go through the numbers of different areas and housing types because some will be more affordable obviously than others. And it's not fair to measure York Region to Toronto to somewhere like Durham Region because it's a $461 cheaper per month to live in Durham now than it was in February compared to other places where we're only seeing a small change of about $100 or so per month. Now, although homes have become less expensive, they haven't exactly become more affordable everywhere just yet. It's going to be interesting to see how the rest of the year really plays out. So the Bank of Canada just announced that they raised their interest rates by another 75 basis points. So I think that we're going to continue to see prices come down as this changes people's affordability, but we may also see less homes become available for sale because sellers are going to be more reluctant to list their homes as they usually then have to be on the buying side and it turns into this cycle. Now, if we don't see the inventory we need or the types of homes that buyers want to buy, the market could become a little bit stagnant for a bit, or we're going to see prices start to stabilize into these new pricing levels. Unless you're buying a property in cash, you're going to be required to take a loan from the bank, and with that bank loan comes interest. And then you're going to be required to pay a monthly mortgage payment. And that payment, for those that don't know, is split up into two portions. So your principal, which pays down what you borrowed for the house, and then there's interest, which then goes to the bank. So yeah, it looks great as a buyer that home values are going down, but what's happening right now is that even though your monthly mortgage payments are staying relatively the same right now, more of your monthly mortgage payment is actually, it's a pretty big chunk, about 70 to 75% of your monthly mortgage payment is going towards the interest, meaning going back to the bank, and less is paying down your principal. So based on your goals, this could actually slow you down because you're building equity slower. And so you never know where life is going to take you in the future. And obviously you can't plan your future to the exact T, but if you're trying to time the market because you want to save on that purchase price, it's likely not the best strategy long term. Buying a home today, if you can, please don't take this as a realtor saying, oh, now is a great time to buy or now is a great time to sell. It's really only a good time if it suits your schedule. But if you're in the market and have been thinking about making a move in the last couple months, and getting into the market today at a higher rate will probably put you steps ahead if you plan on living in this home for a while, because remember, A, nothing lasts forever, and B, these rates will adjust. And down the road, you're going to be able to refinance at a lesser amount because your balance is going to be lower. So no one knows when the market will rebound and when we're going to see an influx of demand again. But when it does, the question becomes, okay, do we have enough homes for sale now for all the people that are looking? And we know what happens when there's less homes available for sale and more people looking. Prices go up. Not only do we have to keep an eye on demand and sales volume, but also inventory levels, right? Because real estate prices are basically centered around supply and demand. And so a lot of people right now are obviously watching how the real estate market is unfolding and trying to time the market with it being more expensive to borrow money and home values being worth 20 to 30% less than they were 6 months ago. And so yes, obviously home values are down and some areas are down more than others in the GTA. And to understand the true value of the home you own or the property that you're interested in, you'd run what we call in the real estate world a comparative market analysis, where it basically singles out a single property and compares it to other properties that recently sold on an apples to apples basis. So then you can actually see the true market value for that home. And don't get me wrong, general stats are great for getting a read on the temperature of the market, but that's only one aspect of it all. And sometimes data can be skewed depending on how much of one home type has sold over another, meaning if you're measuring all, detached homes, sure, you're going to get an average or median number, but the real question should be how much are 3 bedrooms with finished basements selling for versus 4 bedrooms with unfinished basements that are selling for. And that's where a really comparative market analysis will come in handy. So to get a better understanding if this market will benefit you and your situation, use the Calendly link below to book a time that is convenient for you and schedule a call with me to see what your home is worth and what the home that you want to be in is worth. Instead of trying to time the market, consider what your time in the market will look like and run those numbers. Because if you're waiting for the bottom of the market, you're actually putting yourself further behind. Now, let me know what you guys think in the comments below. Ciao for now, and we'll catch you on the next one.